Welcome guys to the Freaky Fast Wealth Targeting module. In here we're going to go through the different pains through different clients so that we can target people to use this equity contract. First we're going to look at the homeowner. We're going to look at its specific pains and how other industries can help solve those pains for the homeowner. FYI, there is some marketing little tip in here that will help a lot of people. Marketing 101. If you're trying to sell a drill, don't sell the drill. Sell the hole that you're trying to fix. Someone trying to buy a drill isn't trying to buy a drill. He's trying to buy a hole that he's trying to make. So again, I'm going to highlight all those holes, all those pains, so that anyone in this industry, not just contractors, not just homeowners, investors, real estate agents, CPAs, business consultants, all of them can help try to serve each other with the equity contract tool. And this is how we can do it. So our goal in this one is to address the common homeowner challenges and demonstrate how equity contracts solve those issues, providing solutions to homeowners to foster trust and position contractors as valuable partners in their financial and property goals so that they can also build wealth. So if we go back to when I was the first homeowner, my first pain was trying to figure out how to do renovations. I was a full-time Marine, let alone barely had time. Luckily, I could save on labor for myself, but I still needed some money for materials, flooring, paint, cabinets, countertops, all the good stuff. It all starts adding up way more than low enlisted Marine could afford at the time. So I decided to look into how can I get these all financed. I eventually stumbled on HELOCs, or I could refinance. First, I needed to build up its equity before I could refinance. So then I started getting into HELOCs. Hey, I can take out this equity beforehand and get it fixed up and then refinance. And that was my plan. It took me maybe a month. I went to the finance consultants on base. I went to the Navy Cross to go see what their opinion was. I talked to Navy Federal Credit Union. I talked to many different banks. Everything seemed conflicted, whether you should do it or you should not do it. Like a credit card, right? Should you open a credit card or not open a credit card? There's two sides of the story, and no matter what, there was conflicting issues whether it was the right choice or not. Eventually, I just charged it on credit cards, opened up some credit card promos, and just did it on credit cards instead of doing a HELOC. The HELOCs right now, 2 to 5%, sometimes higher, depending on your lender, and if you got a broker in the middle, brokering it between you and the lender. We're trying to get rid of all that complication. Let's focus first on those pains originally, and then we'll look at how the equity contract solves those pains a lot better than the current lending situations that homeowners have for properties. So first, we're going to look at the financial constraints. They're limited access to cash for renovation repairs. Currently, we have HELOCs, which is a home equity line of credit. We have home equity agreements, which is similar to a home equity invoice contract. Instead of getting a typical loan where you pay a monthly back or a credit line that you take out and you pay monthly back, a home equity agreement is the same thing. It takes your current amount you're taking out and they take an equity agreement against your properties to later collect whenever you sell or whenever they deem the end of the financing terms for that contract. And that's kind of basically where I eventually got the idea for an equity invoice contract. Looking at HELOCs, the complexity and issues with those. This past 2 or 3 years, home equity agreements kind of flagged past my experience on the investment side, and I got into home equity agreements. Looking at home equity agreements, I thought, wait a second, how can I do this simpler and easier for everyone so that everyone can use it instead of still some of the HELOC kind of hula hoops that everyone has to go through. Or you got cash. If you got cash, you got cash. But even if you have cash in savings, sometimes you want to keep that for extra savings or you want to use it for something else. Since you already are property rich, use that property now without the extra financing lending fees of 2 to 6% with HELOCs or home equity agreements. Second, we got equity utilizations. Uncertainty how to effectively use home equity. Again, this kind of goes into all the fees. On the home equity agreement, some of the negative sides of it are people saying that, hey, I'm going to have to pay a lot more because if my market goes up 5-10% in 2 or 3 years, Hell, we look at COVID, it went up almost 18% just in 1 year. And now we're seeing a downturn and correction right now. But if we're looking at the equity utilization, the homeowner is uncertain. The way we structured our contract is to make sure that they're not passing the risk parameters of what a HELOC or home equity agreement currently do. And that means, hey, let's not let you take out more equity than you actually have on your property or what you will have on your property after the renovations are done. Second, it ties it into where that HELOC or that home equity agreement is going directly to renovations. There is no ifs, ands, or buts. It pays directly to the contractor as soon as it's signed. There's no, hey, I'm going to go pay for a car with this. Hey, I'm going to go on this vacation with this. It's strictly, hey, this is going to renovations. Right now, that was one of the issues, and that's why they do it credit-based instead of asset-based on the HELOC and home equity agreements, because they know once you have the capital in your hands, you technically can do anything with it. They can't force you to do what you want with it. There is other systems, like on the investor side, when you get hard money loans and construction loans, you'll see how they have a draw system, and that also keeps them structured of, hey, that can only get used for renovations and increasing the property assets, and that's why they are structured to more asset-based. With the home equity agreement, we're going to do it all at one time. Third issue is the trust issues. Hesitant to trust contractors and financing solutions. Again, I myself, not only on HELOCs, but every step that I've gone through the rails of becoming an investor, learning the good old hard money. Each hard money lender you look out for is you got to put through the scam test. And unfortunately, there's not so much regulation right now on the private lending side, so where you can get scammed, and there's a lot of scams. They can say the right things, they can do the right processes, and you can still get scammed. I myself have been a victim of this once. They scammed me out of an appraisal fee. Again, I did my best to do my diligence. Again, they can say whatever they want. They can give you contacts to false businesses. Again, there's many trust issues. How do we fix this? Equity contract. An equity contract, you have to meet face-to-face with your contract. There's no lender that you got to communicate by email. There's no lender you got to call or text. There's no one you're waiting on besides, hey, the person that's actually doing the work. We take out all the middleman, keep it simple. Value perception. Difficulty in understanding the value proposition in different financing options. I keep it clear and simple, guys. Hey, you can go look it up anywhere. Any kind of funding fees. Let's look at our origination fees, our broker fees, our title fees, our recording fees, all that. You're going to get charged 2 to 6% of whatever you get out on a HELOC or a home equity agreement. If you're going on something else like a credit card, everyone knows the credit card interest is unless you hack it for 0% for a year and a half. Again, not options for everyone. If I want options for every homeowner, this gives you option for every homeowner. The financing option that we do with the Home Equity Invoice Agreement, a homeowner can simply see it and simply see the value of, hey, this solves this problem for me, that problem for me, that problem. And there's no second questioning, hey, is this a scam or not? I'm with my contractor and we're making a signed agreement that's going to get recorded in public record. No ifs, ands, or buts about it. So again, looking at how the equity contracts solve homeowners' issues, we have financial constraints. Homeowners don't have upfront cash or can't go get financing somewhere else. Equity contract. Equity utilization, clearly define the contract terms and make it easier to leverage home's equity, which builds trust, builds rapport, which again, anyone that does any marketing or any business, everyone knows no one buys for value. They buy off their perceived value of what they're going to get. There's no certainty besides death and taxes, which we'll get into eventually, of why we have such a strong guarantee with our equity contract and this course, and why we were able to charge as much as we charge, because how much we're able to save you just on the hard guarantee. If you can break it, you can break it. Good luck. You can make a fortune off me, but I can guarantee you there's two things that are certain in this life: death, taxes. You can figure out how to beat those two, and then you can beat our guarantee system, where we pay you 3x whatever you paid for this course. Until then, good luck. So one of the many ways to actually build that perceived value for anyone, your client, mainly the homeowner we're looking at right now, is to build that trust and that rapport. Once they have that trust and rapport, they know they're not getting scammed. They know they're getting quality work. They know they can trust your word. That perceived value that they're buying, the value that they want to buy, they have a trust into it that they're easily able to do it. So looking at how equity contracts alone do that, just using that and offering that as financing for them instead of some other option, we're looking at transparency. Open terms and benefits of the contracts for both homeowner and contract that are clearly stated in the contract, and you don't have to worry about getting to the closing table to see all this stuff. Clear communication, and there's no middleman, there's no lender, there's no broker, there's no front office you gotta call. It's directly between the homeowner and the contractor. Providing examples, again, many benefits of our wealth trading community. If you haven't already, go join the community, and there's plenty of case studies and examples that you can use and pull from each other and share with each other, saying, hey, Joe on Gilligan's Island just did this with the homeowner. They financed $30,000 of this project. He gained this much capital on it. He saved this much taxes on it. This homeowner over here did this with this property and this contractor. Get on there. There's plenty of stories you can pull from there. You can dive deeper. You can communicate with each other. Get the full story from each other. Collaborate with each other. Hey, I love your story. Can I get a video or a clip with you? I want to show my homeowners in my market how I can solve their issues. Ongoing support. Again, the wealth trading community, whether you're an apprentice or you're a master, there's plenty of value in there that you can actually gain from each other to actually get support from each other of saying, hey, how does this work for my homeowner in this company? Hey, my homeowner client is this client. Because again, not every homeowner has the same pain, not every homeowner has the same need. Being able to see all the different homeowners' needs. I was only one person. There may be other needs out there for different homeowners that many contractors, many real estate agents, many CPAs, many title agencies can help the homeowner. Effective communication. Simplify complex terms. We're going to break down exactly what equity term we're using. We're going to use definitions. We're going to use a third grade reading level. We're going to use a short document. It's going to be an open document to the public to use. So where anyone can see this and figure out, hey, this is what's going to happen in this transaction process instead of all the unknowns with HELOCs and lenders and banks. We're going to focus on the benefits, how this actually solves the pain of the homeowner. Fortunately, our brains are more wired survival-wise rather than reward-wise. That's just how it is. So if you can highlight, hey, you have this pain, you have a hole that you need to make, I have this tool, I have this drill that can solve that for you. If you just go on about this drill, it's fancy, it's fast, it goes this many RPMs, it can do this and that, the homeowner's not going to be interested since he can't actually find the solution to his problem, his individual pain. And lastly, use visual aids. And this is where we're going to come in. We're going to actually give you guys the tool for this. We're going to give you the homeowner pamphlet, simple info guide, guided directly to homeowners so that they can see it through their perspective. Hey, I'm going to have all these pains solved if I have a contractor that has this tool, or I have this real estate agent that has this tool that can connect me with the contractor. I'm going to have my pain, my issues solved. My survival need of any of the pain that I'm experiencing will be solved. I won't have that pain anymore. Happy customer, happy life. So to summarize, understanding and addressing homeowner pain points is essential for successfully implementing equity contracts. Building trust, demonstrating value, and effective communications are key pillars to this process, not just to this, but any business, any marketing, any tool, any product, any service that you need, any brand, whether you're just a nonprofit and you need to spread your awareness. If you're a religion, if you're some cause trying to just spread awareness, you need those key pillars to effectively do that. And we're going to give you the tool to do that with our info packets and my experience throughout the different industries of myself being a homeowner, working with homeowners as contractors, and also being an investor in the different investor hats and characters and roles in that kind of industry also. So stay tuned. On our next, we'll look at the investor side of it, similar to the homeowner, but more geared towards making that money.